We would like to welcome you to the first of our series of company presentations discovering successful gold and silver exploration stocks. I think you'll find this very valuable use of your time. We all have many companies to look at. We pre-select the companies we present, and in our opinion, over the next 2 years, most of them, if not all, will outperform the market averages. Of course, there's a disclaimer that you should do your own due diligence. I'm a cosmic value person. That means I like to buy something that's undervalued, and I like to buy it at the right time, or times, as is the case. I also prefer buying metals, gold and silver, wholesale, not retail. And by this I mean, I don't want to spend $4,000 for gold when I can buy it for $1,500. And I don't want to spend $45 for silver when I can buy it for $20. And that is to say, if you buy good gold and silver companies, they will outperform. And we'll give you some examples of that. Of course, you have to do in your portfolio what you're most comfortable with. Our basic view is everything going on now as investors, not traders, is for November 2026. We're interested in making more money with less risk, diversifying our portfolio, and being prepared for the winter of 2026 when the markets will be down. How far down, of course, is an open question, but we must have the capability to buy if and when the markets panic. And we believe very strongly and have shown that good stock picking and or with trading can vastly outperform index funds, which generally speaking have done very well over the last few years. The first company we want to present to you is Silver One Resources. That's a U.S. Future producer. I'd like to present now one of our favorite silver exploration plays, which very often goes up 100% or more over a few months with the price of silver. And would you first introduce the company, and then I have a few questions I'd like to give you.
Sure. Thanks, Henry. My name's Greg Crow, President and CEO of Silver One Resources. We're concentrating our efforts on 3 projects in the southwest U.S. 2 of them are located in Nevada, and 1 is located in Arizona.
Now, what are the projected 2026 milestones and catalysts? If everything goes the way you hope it will go, what can investors expect by next year at this time?
Okay, so we have, I'm going to talk about 2 of the 3 projects because they're the more advanced ones. We're not doing a lot of work on our 3rd project. We just have limited capacity, shall we say. The first project is the advanced Candelaria past-producing silver mine in Nevada. And the big milestones that we're looking for is we are just about ready to finalize our first economic study, PEA. The project consists of 2 big past-producing heap leach pads and 2 big past-producing open pits. We've already drilled and outlined additional resources down dip from the open pits. We have resources on the heap leach pads. We've done metallurgical work, and our projection for a final economic study is probably January of 2026. We hope to have it in December, but we're a little bit behind schedule with the engineers. The other milestones, of course, is after the economic study, we'll be doing more metallurgical testing in preparation for a plan of operations. And the reason for that is because Candelaria was a past producer, and because the previous operator, Kinross, never completed reclamation, the mining permits are still active. And we've been told by the BLM and the Nevada Department of Environmental Protection that once we get them a plan of operations, they will update those permits in a matter of months. So that's very important with respect to moving forward to restart the past producing silver mine. Now,
Absolutely.
our second... Yep, go ahead.
Sorry, go ahead. No, go ahead.
Yeah. Yeah, our second project is the Phoenix Silver project in Arizona. It's at the very northeast end of a very prolific copper producing belt that includes big projects such as Freeport-McMoRan's Miami project, BHP's Ocelot project, and probably more renowned is the BHP Rio Tinto joint venture called Resolution. We're at the northeast end. We have extremely high-grade silver opportunities with big silver nuggets being found on surface. And on the southern part of our property, right along strike from Freeport and BHP, we have excellent upside porphyry copper-silver potential, and we've already been looked at by several of the big companies.
Excellent. Now, there are literally thousands of stocks to invest in. What are the major reasons to invest in yours?
Well, if you like a company that's near-term production potentially, and I'm thinking, in the next couple of years here, we're probably one of the closest ones to a production decision in terms of silver in the United States and Canada. Candelaria, so as I mentioned, we want to get our economic study out, plan of operation, proceed to permitting, and then production. Start out, producing from the heap leach pads and then move on to bringing in the fresh material. Probably projected, and this is back of the envelope, have 10 to 15 years worth of production at the outset. On top of that, it has excellent upside exploration, of course, for additional resources. And then we have our Phoenix Silver project down in Arizona that, as I mentioned, has these extremely high-grade silver vein potential, which we are continuing to explore, but also has this porphyry copper-gold potential system depth, which is right along strike from Freeport-McMoRan and BHP. That brings excellent upside exploration blue sky potential.
You've just answered the third question, which is what is the potential blue sky?
So we can skip that question.
We can skip it, you answer, because obviously there's a lot there. Okay, and now the cheeky one is if you were only able to invest in one other company in your space, but not yours, which we obviously are a big investor in, what company would that be and why? Just very briefly.
Well, the one I like is, I'm more interested in something that's, very close to production or in production. And one that fits that bill right now is Vizsla Silver. I really like Vizsla. I think they've got excellent resources. They've got good production potential coming up. And I know they're at the higher end of the junior resource price range, but a lot of companies have moved up as well in terms of that price range. I just think they are good value.
We definitely agree with you, and I think yours is as well. And we certainly recommend that people put it on their trading screen and watch it. And when the time is right, invest in it. Good. Thank you very much. So let me just. And again, this is just a quick repeat for why be interested in the company. Two very nice projects. And the main is about being close to producing decisions. So there's a lot of good reasons to track this company. And if we look at the time we're doing this, it was double the value that you would have gotten by owning silver. Our thesis is if you choose good companies as the types we present and gold and silver goes up, it will go up more with these companies. And even if the gold and silver stays neutral, it will go up more. So there's a lot there. And we've discussed this in several of our other webinars. The next one we'd like to present you is Gold Terra. It's a company we've presented a number of times. It's already done its first double, but it's just the beginning in our opinion. They have a lot to say that's quite good, and I think it's something you definitely want to be watching with excellent management and excellent opportunity. Here we are. I'd like to now introduce Gold Terra. If you could briefly describe the company.
Gold Terra is the advanced explorer development company, basically focusing on Yellowknife area, the Yellowknife Greenstone Belt. which produced 14 million ounces of gold at grade of 16 to 20 grams, and shut down in 2003 when gold was $340 an ounce.
Well, we're much higher now, so it's certainly a good position. Okay, what are the projected 2026 milestones and catalysts? And if everything goes the way you hope it's going to go, what can investors expect next year?
Well, we stopped our drill program in April in 2025, the deep program, and refocused near shallow. When we signed the acquisition with Newmont to purchase the Con mine in 2021, gold price was $1,700 an ounce. We're currently sitting with a much different environment, with gold above $4,200. It is almost 200% higher than where we signed the deal. So every project, including high-grade projects, which are easier to develop than low-grade projects, have a different catalyst, have a different meaning to the situation. We become a target. We're not a very expensive project to develop, but you have people to realize that the Con mine acquisition allows you to put the mine back in production as a brownfield project in a much faster way. Our focus will be to drill near surface between surface and 700 meters vertical along the trend of the Campbell Shear, who produced the 14 million ounces of gold over time.
Okay. Now, as you know, there are hundreds and literally thousands of stocks to invest in. What are the major reasons to invest in yours?
Look, I'm not there to be a competitive story. My job is not to be in competition with others. My job is to create shareholder value on a very good project. And the Con mine and the Yellowknife Belt have been completely underexplored, left in the closet over the last 22 years. We've been working on it, and you look at our track record. I've been involved since 2019. I put my $2 million of my own money. I own 14.5 million shares. We have a very good shareholder base with McKinsey Fund, Eric Sprott, US Global, as well as Ingo Snyder's. Our supporter knows that this story will eventually get its reward. Yes, we are undervalued, but at the same time, our focus, our tenure in Yellowknife is a top-class project.
Yeah, absolutely. Now, what is the potential blue sky?
Well, I'm not going to say endless because there's always as much as you can drill. Our problem over the last 3 years was money supply. There was no money supply to do all the drilling we wanted to do. For example, we have a discovery of an ounce per ton over 3 meters near surface, 20 kilometers north of town, called Zone 14. We drilled that in 2022. We got the result at the end of the program. It was old 14, 2214, and we drilled Zone 14. And we haven't gone back. But this winter we are. We are getting ready. We still have money from our flow-through raise, so we still have money to drill. Our cash position is fine, is over $2 million, and we have enough money to start drilling in December, January, and that's what we're planning to do. We're also going to be, planning a program on the Campbell Shear in 2026, which is a very important cornerstone in our story because it brings you a lot of infrastructure. And don't forget, our cost of drilling separates us from many other companies. $250 per meter all in.
Very cheap. Okay, my last question, since you're a very experienced and successful investor in the gold space, if you had to invest in only one other company that wasn't yours, obviously you invest in yours very heavily, what would it be and why? Very briefly.
It's very hard to say. I think you have to evaluate project on their merit according to location, according to potential size of developing. I know when I joined Terra, we went in for a 5 million ounces story. We didn't go in for 1 or 2 million ounces. The money supply has to slow us down. But what is the potential in Yellowknife? I would say 5 to 10. It's just a matter of drilling. Only on the coal mine itself, I think I have a potential of 2 to 3 million ounces.
Yes. You've sold us. We agree on that.
But to do, and I spend all of my time working on Gold Terra. Yes, I look at what's happening elsewhere. But with my experience after 40 years plus in the gold industry is that I like projects in very good environmental, stable, political environment. So I am very careful about what I would say should be. But look, grade is king. Look for high-grade stuff.
Okay. No name then. Okay.
No name.
Okay. Good enough. Well, certainly yours is a very good situation, and we believe in it very strongly. Well, thank you very much, and we certainly recommend that people follow this story. And thank you.
Thank you very much.
Okay. And take a look at this. It's about 60% more. And depending on when you look, I think it's going to be a lot more than the price of gold. Okay. And now we have another company, which is Flagship Minerals. And now I'd like to introduce Flagship Minerals. Could you please tell us a little bit about the company?
Hi, Henry, and it's really good to be here. Flagship Minerals has the Pantanillo Gold Project, which is in the Maricunga Gold Belt in Chile. This has got 1.5 million ounces of gold, 80% measured. It was owned by Anglo. It's now owned by us. It's 40 kilometres south of Rio 2's Phoenix project, and this is what got us excited. Phoenix is in construction, fully funded by Wheaton Precious, low capital intensity, low AISC, ticks all the boxes, and that's why we're there.
Good. Okay, so if everything goes forward the way you hope it does, what can investors expect to hear about in the next year?
Okay, well, first come off the rank, we've got an NI 43-101 supporting the current mineral resource. We're converting that to a JORC mineral estimate. But in that process, we'll be dropping the cut-off grade from 0.3 grams a tonne to, say, about 0.15 grams a tonne. So we'll collect a heap of ounces in that process. But also, the current is based on the economics in 2010. And so we expect to gain a lot of ounces by bringing into the resource estimate current economics. We expect to be delivering this upgrade late October, early November. And then we go from there. We've been doing work on the current database. We've put into the market a lot of cross-sections, some met work, which is really positive. We're focusing on oxides and mixed zones, so a lot of work around that.
Okay. Now, as you know, there are literally thousands of stocks that we can invest in today in the mining space. So what would you say are some of the major reasons that investors should look at and potentially invest in Flagship Minerals?
Well, Henry, when I look at a project, it's all about, there are many metrics, but the key metrics I look at, one is capital intensity or potential capital intensity. Because we're looking at a oxide style project, capital intensity will be low. So when we look at the Phoenix project, which is our sort of ready reckoner for where we think we can take the Pantanillo project, its capital intensity is around US $117 million to produce just under 100,000 ounces for 12 plus years. So that's a good tick. The second is AISC, so all-in sustaining costs. in the belt, the Vulcan project, which is 12 kilometres north of us, its PEA has them at $1,002, so very low. And then the Phoenix project is at 1237. Just about on any cost curve, that's down in the first quartile, so that's where we want to be. And thirdly is your operating environment. So Chile is a well understood mining jurisdiction, no issues with labour, no issues with energy, and that's really important, particularly as we head into a market which is starting to draw on the labour resources. So we're already in Australia, for instance, we're seeing that the cost per ounce in the first half of this year, 2025, has increased $200, and that is due to energy and labour. So it's important that your operating environment can take new projects, and there's a labour pool to draw from.
Good. Okay, now what's the potential blue sky for investors? your dream, that thing that may not happen, but wouldn't it be wonderful?
I love that question. Look, the blue sky is, so there's 1.05 million ounces now, and most of that's measured, and the immediate blue sky is we'll see a material uplift in contained ounces just through adjusted economics and cut-off grades. So that's sort of the easy part of it. Pantanillo is 110 square kilometres, the block area. Directly along strike, we have, for ease, we call them the T1 and T2 targets, which is about 5 to 6 kilometres of strike north and south of the current MRE, and there's going to be some ounces in there. We have deeper sulfides. Right now the pit shell goes to around 250 metres. The deepest hole is in vertical metres, 600 metres, and finishes up in mineralisation. So there's some gains there. And then we've got 5 really hot prospects throughout the block. So we're targeting volcanic alterations, and we've got 5 really large alteration targets to look at. And that's the blue sky.
Okay, good enough. Now, maybe sort of a bit of a cheeky question. If you could only invest in one company in the mining space, but not your own, which obviously you do and want to, what company would it be and why?
Look, this is one of the hardest questions. And it comes down to value, and I cannot answer it. And the reason is, where I want to take the company, when I look at companies like London, Capstone, in Australia, Northern Star, and that business model is about the cornerstone asset. So they are the sorts of companies I would invest in, but a long time ago. Right now, we are the company now, which would be that.
Yeah. Fair enough. Well, hopefully our investors.
I hope so too.
Okay. And once again, if we look at Flagship Minerals, we can see that they performed quite well and should continue to outperform the physical gold market. And here's a little bit more about them, just repeating what we've seen. And of course, why it's undervalued. And this is true for, I believe, all the companies we're presenting, or we would not be presenting them. So the only question is whether you should be buying or selling now, and it depends on what you own in your portfolio. We believe the gold and silver is a bit expensive. We think there's more upside in terms of trading, but more downside as well. So if you're heavily in, I would be reducing a little bit, but adding at appropriate times. Certainly the companies we present in the basket overall have historically outperformed. So be prepared, track these companies and similar ones that you think are good, and be ready to act when it